So welcome everyone. Thank you for joining today. My name is Vickey Sobhani. I'm an economist here at MiHR, and today I'll be taking you through a presentation of our key findings on Alberta's mining labor market analysis. The aim of the study was to provide insights that may help decision makers shape workforce development and provide information for career seekers on job opportunities and the potential for professional growth in the mining sector. This presentation should be about half an hour long, after which I will open the floor for any questions that you may have. So before we dive into the analysis, I would like to take some time to establish mining's relevance to Alberta's economy. Alberta is mainly known as an oil and gas hub, but the province is also home to a prominent mining industry. Mining in Alberta falls into three major categories, which are oil and gas, coal, and emerging resources and critical minerals. I'll quickly go through each, starting with oil and gas. This slide presents a fact sheet on mining and its relation to Alberta's oil production. If I could just get your attention to the right side of the slide here. This map shows all the different oil and gas projects in Alberta, and then highlighted in red are the bitumen projects. If we take a closer look at historic and forecasted bitumen production in Alberta, it shows that roughly half of it requires mining. So why is that relevant? It's because it translates to mining jobs. In 2023, bitumen or non-conventional oil extraction represented about 31,000 jobs in terms of direct employment in the province. So the key takeaway in this slide is that mining is intrinsically connected to Alberta's oil and gas sector. Moving on to coal in Alberta, over the last decade, coal production has been declining. Now, this decline is mainly affected subbituminous coal production, while thermal coal has expanded and is projected to remain relatively stable in the next decade. Even so, mining is still a source of direct employment for the sector, with 910 people employed in the province in 2023. And then the third category of mining is the emerging resources and critical minerals. As shown on the map on the left, there are only a few active projects focusing on critical minerals in the province right now, but this side of the mining sector has the greatest potential for growth. The map on the right shows the future geological potential of these critical minerals. Now, before 2020, emerging resources did not attract significant capital investments within the province, but since then, there has been a growing share of capital directed towards critical mining. So just to sum up the last few slides, the takeaway is that the mining is in the fabric of Alberta's economy. It is present in oil, it is present in coal, and increasingly in critical minerals. Mining activities represent a major source of employment for the province. We estimated that it accounts for about 20% of the jobs in the sector. So that translates to 1 in every 5 jobs in mining and oil and gas attributable to mining. Tying this back to the scope of the project, because mining is so interconnected with oil and gas, and especially given data constraints, for the report and the rest of this presentation, when I refer to the mining sector, I'm talking about mining, oil, and gas as well. So for those of you who are familiar with industry codes, we are using NAICS 2.1, which includes mining, oil, and gas. The objective of the study was to perform a health check on Alberta's mining labor market, which includes identifying and diagnosing occupations that are facing shortages, understanding effective strategies to achieve a balanced labor market, and then highlighting some statistical and demographic trends within these occupations. The primary research question the report focuses on is how sustainable is the labor market for Alberta's critical mineral mining occupations? At its core, this question is about labor supply, or basically the availability of labor. Is there enough available labor supply to meet the ever-shifting labor demand? We will explore this question further in a minute, but first let me introduce some of the critical mining occupations that are included in our study. So based on feedback from the project's advisory committee, we had selected 10 critical occupations. These occupations are aligned with Statistics Canada's National Occupational Classification, or the NOC system, and these are meant to capture the critical roles within mining sector in Alberta. These 10 occupations were selected due to their high prevalence in the mining sector. Together, these 10 occupations represent about 15% of the sector's labor force. On top of them being prevalent, most of these occupations are also heavily concentrated in the mining, oil, and gas sector. So for instance, about a third of the labor force of all heavy equipment operators is in the mining sector. It should be noted that while these occupations are critical to mining, they also share the labor pool with other competing sectors such as construction and manufacturing. So looking at heavy equipment operators again, 47% of the labor force are in construction. Now that I've given you some background context, let's get into the findings of the report. The report itself consists of 3 main chapters, which are forecasting the labor market, key informant interviews, and occupational trends. For this presentation, I will briefly walk you through our forecasting model and spend some time addressing our primary research question. Then I will share some common themes and challenges that emerge from our key informant interviews and talk about the persistence of these trends within the mining sector. So for this section, our main goal is to explore the primary research question, which, just as a reminder, was how sustainable is the labor market for Alberta's critical occupations? We would say a labor market is sustainable when it is robust enough to support growth, adapt to economic and technological shifts, and meet long-term industry needs. Because this is a supply-focused question, we'll start on the supply side. This is a visualization of our labor supply framework. The framework consists of the entire population of Alberta and then progressively narrows down the population based on their degree of attachment to the mining sector's relevant labor pool. To estimate the labor supply, we start at the top of the graph, which represents everyone in Alberta, that is total population. And then as we move down the picture, we lose people at every stage until we arrive here at this yellow box, which represents the workers in the mining sector. Each of these stages represents a point of attrition for the mining sector. So when we look at the whole picture, it tells us where the sector is losing people. Each of these stages are also underpinned by a key assumption in our model. I won't go through our list of assumptions in this presentation. It is in the appendix of the report if you're interested. But I will say that the assumptions are on the conservative side, and they're based either on direct estimations from Statistics Canada or from observable historic trends. Using this framework, we want our supply model to estimate 3 things for us. First, the overall labor supply available to Alberta. Second, mining sector share of that labor supply. And then finally, the labor supply for each of the 10 critical occupations. This picture here shows the overall labor supply in Alberta for all occupations. And the grayed out area that you're seeing to the right is the 10-year forecasted period from 2024 to 2033. Labor supply is projected to grow by 24% in the next decade, and this supply growth is largely due to the strength of international migration to Alberta. So our forecast estimates that the overall labor supply in Alberta will be roughly 3 million people by 2033. And of those 3 million, the mining sector is estimated directly to employ about 146,000 people, which represents 5% of the overall labor supply. And this is shown as the yellow line in the graph. Historically, the share has remained relatively stable, and it is difficult to change because efforts to increase mining share always tends to be counteracted by competition from other sectors. And as we've seen earlier, mining is sharing the labor pool with other sectors such as construction and manufacturing. This table shows the overall labor supply and mining's labor supply by each of the 10 occupations. And then the last column in this table is what we're driving at, which is the mining's labor supply. So then the next question becomes, is the supply by each of these occupations enough to meet labor demand? This graph shows our labor demand projections. We used a time series econometric model that considers historic patterns and various demand indicators to predict future employments. We have estimated 3 demand scenarios: a baseline scenario, which represents moderate industry growth, an expansionary scenario, which represents substantial industry growth, and then a contractionary scenario that represents a slowing down of the industry. Today, I will focus on the baseline scenario, but the report includes analysis for the other 2 scenarios as well. In the baseline, we are estimating about a 16% increase in demand over the next 10 years, which translates from 138,000 people in 2023 to 161,000 in 2033. In our model, this is primarily driven by elevated oil prices, which are estimated to remain high in the post-pandemic world as global demand for energy continues to rise. This table compares mining share of the labor supply with labor demand to calculate the labor gap by occupation. So in this case, labor gap is defined as the imbalance where labor demand outpaces Alberta's labor supply. Let's take a closer look at the gap here. In the graph on the slide, the solid portion of the bar chart is representing mining's labor supply in Alberta. This represents an estimation of what we think the sector should reasonably be able to get based on Alberta's population, mining share of the labor supply, and other current conditions. And the stripped portion is the labor gap, or the labor required in excess of supply. So based on our assumptions on current conditions, all 10 occupations project a gap in 2033. This means that Alberta's labor supply alone cannot sustain the anticipated growth in demand over the next decade. So if the objective is to achieve full reliance on Alberta-based workers for these 10 critical occupations, the province's labor market will likely face challenges in sustaining its future growth. That's because this gap represents additional effort above and beyond the status quo conditions. And this effort could translate to recruiting from out of province or hiring workers away from other sectors. The magnitude of the gap differs by occupation. The largest gap is seen among heavy equipment operators. But it also should be noted that the degree of effort required to fill this gap may vary as well. So what I mean by that is that filling the gap of 48 mining engineers may prove to be more difficult than filling the gap of 236 welders, just because of different skills and training requirements and challenges that are unique to the occupations. Now, before I wrap up this section, I would like to revisit this picture again from earlier and add some numbers to it so that we can see where we're losing people. So where are the bottlenecks in our 10 critical occupations? We find that there's a massive drop-off at the stage where people choose their occupations. So looking at the total labor force that is in purple, we went from 3 million workers to 97,000 in our 10 occupations. This means that only 3.2% of the labor force is choosing these occupations. And secondly, of the workers who are going into these critical occupations, only 21% are going into the mining sector. So there are two major points of attrition happening in this picture. The first is that people are not choosing the 10 critical occupations as a critical path. And then the second is that they're not choosing mining. The first points to a need for strategies such as boosting careers and occupational awareness and increasing education and training. So this would require collaboration with other sectors to grow the occupational labor pool such that it can sustain growth from all sectors. And then addressing the second challenge requires strategies to attract workers into the sector by offering competitive wages and benefits, investing more in recruitment efforts, and generally intensifying advertising campaigns that are centered on mining. But again, these strategies may vary depending on the occupation, but there are some common overarching trends and challenges that we are seeing. Which brings us to our next section, that is the occupational trends. For this study, we conducted a series of key informant interviews with stakeholders across Alberta's mining labor market, just to better understand the challenges that the sector is facing. And we noted some recurring themes in our conversations, which are listed here in this slide. We then couple these with some of the occupational trends that we're seeing in the region to understand whether these challenges were persistent. I will just go through some of these quickly. The first challenge that we're seeing is with remoteness and relocation. On this slide, the first map here shows the boundaries of economic regions in Alberta. And then this is contrasted with the location of producing mines in the center map. So as you can see, the majority of the mines are concentrated in the Wood Buffalo region. And then finally, the map to the right shows the distribution of the place of residence for workers in the mining sector. And unsurprisingly, most people are located in the urban cities such as Edmonton and Calgary. The remoteness of many Alberta mining job sites and workers' preferences for urban living presents a significant barrier to recruitment. And mitigating these issues would mean targeted marketing strategies featuring amenities in these regions and providing relocation support to attract talent to these locations. The next theme I want to discuss is the perception of housing costs. The interview suggests that the mining sector is hindered by a less than favorable reputation, and that reputation extends to the places where workers would need to relocate. And a long-standing perception is that Wood Buffalo region, where most mines are located, has a high cost of housing. Over the past decade, the average rent has increased for most regions in the province, but by contrast, the average rent in the Wood Buffalo region has dramatically decreased over the same period, as shown in the red line in this graph here. Housing vacancy rate in the Wood Buffalo region has also been eased from the tight period that we were seeing in early 2000s. This also kind of supports the case that compared to historic benchmarks, housing accommodations have become more accessible. And the decline in rental expenses in the recent years may not be something that is well known among prospective candidates, and that could be a barrier to entry. However, while rental expenses are down, the story is kind of opposite for homeowners. So we're seeing that in the Wood Buffalo region, it displays the highest cost of shelter for owners, representing a potential obstacle for workers and families looking to potentially move here for the longer term. The next challenge is the widening age gap in the province's mining workforce. So from 2012 to 2023, the share of workers under 25 years old declined from 13% to about 5%, while the workers aged 55 years and over increased from 13% to 20%. And the graph on the right ranks the ratio of 55 plus workers to workers under 30 in critical occupations. And we can see that certain occupations such as construction millwrights and heavy equipment operators skew more towards older workers. So then this graph shows the distribution of the occupations in more details. While some occupations such as supervisors naturally lean towards older workers, the generation of workers, the younger generation of workers is relatively absent in certain roles. And this could potentially lead to succession challenges in the future as the older generation of worker exits the labor force. The next theme that we're seeing is the decline in enrollment of mining programs. The mining sector depends on the post-secondary education system to ensure that there is a reliable and sustainable source of new graduates to enter critical occupations. This is becoming more and more crucial for the aging population. And with the rise in retirement, a disruption to the pipeline of potential future workers is just detrimental to the health of labor market. Taking mining engineers as an example here, the chart on the left shows what people employed as mining engineers tend to choose to study in university. And unsurprisingly, the mining and minerals engineering specialization is the most common. The graph on the right shows how this field of study has declined significantly, though, from 2017 to 2022. On top of that, the University of Alberta is the only university represented as having enrollment in this field of study. So this indicates the lack of diverse program options for students entering this field as well. Another theme is that the sector is struggling to incorporate immigrant workers. And this is such a missed opportunity given that immigrants represent an increasing share of the labor supply. So in 2023, immigrant workers represented about 31% of Alberta's labor supply. And this is a significant increase from the 17% that we were seeing in 2006. And if this trend were to continue, the inability to attract immigrants to the sector will become a more significant obstacle. The representation of immigrants does vary depending on the occupation, though. Certain occupations, such as engineers, have a higher percentage of immigrant workers, whereas trade occupations show lower levels of immigrant participation just across the board. Another key takeaway from this graph is that the mining sector is underperforming compared to other sectors in certain occupations, such as underground miners and construction millwrights. This suggests major barriers to entry for immigrants to the sector for these occupations that are not necessarily present in other sectors. Another key theme is the seasonal and cyclical employment fluctuations in the mining sector. This slide shows the unemployment rate for the critical occupations from 2001 to 2024. Some of the jobs, such as heavy equipment operators, is more seasonal, whereas others, such as welders, show more sporadic unemployment periods that last about 2 to 3 years. And this constantly shrinking and expanding of workforce in such a way has a negative effect on employee retention over seasons, and then it tends to increase recruitment costs. The next concern was that Alberta's wage advantage has been falling over the recent years. Alberta's mining sector has a reputation as an industry that pays well relative to its competitors. And the graph here shows that the average wage premium paid to Albertan workers above non-Albertan workers from 2014 to 2023. Among all industries, the wage premium paid to Albertan workers has fallen from $8 per hour in 2014 to less than $2 per hour in 2023. And in the mining sector, the premium fell from $13 per hour to $11 per hour over the same period. But despite this narrowing wage gap, the other regions, mining has consistently been the highest paying sector by measure of hourly wage rates. This is shown as the blue line in this graph here. Then looking at this from an occupational lens, the annual incomes in the critical mining occupations are all above Alberta average. But it is important to note that while wages are comparatively high, the challenges discussed before, such as the remoteness of jobs, the scarce labor pools, and ongoing issues with cyclicality are contributing factors that push wages above their expected range. And then finally, there is a need for consistent workplace development and training that are necessary to promote labor market stability. It's key that contemporary training and skills align with the workplace so that workers can adapt to the changing demand and the environment and technologies. This table here matches the different workforce skills used across occupations. And then we're rating them based on the requirement of level of proficiency on a scale of 0 to 5. So for example, engineers and supervisors are expected to have a higher proficiency in planning skills compared to other occupations. So the report contains the full list of occupations and abilities matched to critical occupations. This is meant to be kind of a reference point for how skills and abilities are distributed among the labor force to anticipate skill gaps and to acknowledge that there are some transferable skills and abilities that are across occupations. That brings us to the end of my presentation. Thank you for your time, everyone. I will now open up the floor for any questions that you may have. Okay, the first question. Yes, we can send a copy of the report to you. It should be in the link, I believe, in the webinar invite, but if not, we'll send it to you again after the presentation. Okay, the first question that I have here is, what are some of the main reasons mining and oil and gas isn't able to leverage immigrant workers as well as other industries? This is a great question because as I was saying about the labor supply, majority of the supply growth that we are seeing is because of the international migration to Alberta. So getting that immigrant workers into the industry would be really critical. In terms of why we're not able to kind of tap into that demographic, I think it is related to what I was talking about earlier in terms of the remoteness and relocation issues. Because as the producing mines are kind of concentrated in the Wood Buffalo region, and immigrant workers tend to be kind of concentrated in the urban cities like Edmonton and Calgary as well. So there's that disconnect between where they're staying versus where the jobs are. That tends to be an obstacle. And then also because mining is such an industry that is more community focused, especially for trades occupations, if immigrants are not in those communities where they're seeing people working in the trades occupation or working in the sector, it is difficult for them to even be aware of these occupations that are present in the sector and the jobs that could apply to them. So I would say more awareness in terms of what jobs are available. And then in terms of the remoteness issues, thinking about strategies around relocation benefits or providing just more information in terms of what are available in the regions where these jobs are focused. Thank you for the question. Okay, got another question here. It says, I'm a Peruvian geologist and I'd like to know how is the exploration industry for critical minerals? For critical minerals, we are still very much at the emerging stages of it. In Alberta, it is just starting to see more capital expenditure in the field. It was, let me go back to that slide there. Here. So emerging resources are, there is a lot of potential here. The map on the right, it shows all the potential that there is specifically in Alberta for critical minerals. And then in terms of capital expenditure, we're seeing more and more spending in this region. So for sure, it is a future. It is something that I believe will be more important in terms of production in Alberta in the future. And with the government focusing more on critical minerals, we are definitely going to see a rise in production here, and which would, of course, translate to more jobs specific to critical minerals. Okay, the next question we have is, what can we do about the declining enrollment in mining programs? Okay, this one is interesting because we are seeing, because of the cyclical nature of employment, we tend to see enrollments going up and then down. There's a bit of volatility there as well. That partly has to do with career awareness as well, because of the reputation that mining has. If we were to focus a little bit more on what mining brings in terms of sustainable critical mining, in terms of what career paths you can take, and then just connecting the universities to the workers as well to see if there is any type of subsidy that could be given to students or any type of workplace programs that can be available right as soon as they come out of university. That could be really helpful to kind of bridge the gap where we're seeing a decline in industry in university, but then we are still needing more workers in the workplace. Okay, the next question is, what about mining and engineering consultant companies in Alberta? What is the trend of them? I am not entirely sure if I know of specific mining engineering consultant companies, but from the stakeholder interviews and talking to employers in Alberta, we're sort of seeing similar trends in terms of, okay, we need to hire more mining engineers, but there are not a lot of mining engineers in the pipeline because of this decline in enrollment. So we're seeing employers be more involved with these post-secondary education providers to see if there can be subsidies provided to universities to see if they can have more people come into the pipeline. Okay, if you can think of any more questions, please feel free to reach out to us by email. We are more than happy to help. If you go through the report and you think of more questions, please let us know. Otherwise, thank you everyone for joining today and have a great rest of the week. Bye.